I'm going to head over here and show you something I think you'll find is very interesting. And this is data I compile on a monthly basis. And obviously August has just concluded. Here we are in September. And we have the S&P 500 total return index, using this as a proxy for returns on US markets. And it's very important. You do see this data quite often, and you can actually Google it. You can Google S&P 500 monthly returns. So you're going to get a bunch of stuff which is honestly quite useless to you, because it'll be based upon, invariably it's based upon, at least the stuff that you can get access to is based upon what the index itself is doing. It's useless because stocks pay dividends, and as an investor, your total return is a combination of your capital returns, which is what the index represents, and your dividends, which comes out of the index. Each time a dividend is paid, stock goes ex-dividend, the price of that stock reduces, therefore the price of the index will reduce to reflect that. So it's the total return we want. And then you hear a lot of stuff about, oh, look, since 1950, September's a bad month for the S&P 500. And I say, so what? I'm going to say stuff was a bit different back in the 50s compared to right now. Okay, I'm not even going to try and make you imagine what stocks, S&P 500, compared to the ones now. I bet you they're just a little bit different. So I don't think you can just go, oh yeah, September's bad, 1950. I think you kind of have to look at it on more practical timeframes. So here I've got for you, and this you don't see anywhere else, how the S&P 500 total return has performed over various timeframes from 30 years back into the 90s. I could go further back. I just don't think you need to. 20 years, 10 years, and 5 years. And yes, we can confirm that September is a bit lousy. And I say a bit lousy because if you look over 30 years, it's about 0.5%, isn't it? Just reading off there. It's about, close to 1% over 20 years, not getting better. Over 1%, I'd say. I don't have the exact numbers to hand, but you can just visually read off there on the scale. For 10 years and then over 5 years, it's real bad. So I think we've only had 1 year in the last 5. 2019, I think, was an up year, but the rest of them have been pretty bad. Last year we were down 9.9%. That's going to have a big influence on that average. And you can say, well, okay, I'm just going to get the hell out of here in September and I'll come back in October. And that's not necessarily a bad strategy. Then you're probably overlooking the fact that you don't know when in September it's the worst. So it's not a matter of saying, well, I'll buy in October. I think you look at September, you say you want to buy sometime in September, so you're set for October and November, which is typically a very good month. If you look at actually over 5 years, November, I reckon, just edges out July as the best month for the S&P 500, but it is a very good month over all the time frames. In fact, I reckon it's the best if we go out to 20 years and 30 years, and then December typically is an up month as well, although the last 5 years it has been the case. So either the glass is half empty and we're all going to hide under the bed for September, or the glass is half full. We could be coming up to really good buying opportunity. Just to finish this point, how are we tracking? Is 2023 a typical month? Is 2023 an average month? Because averages kind of don't mean much, do they? It's just what happened over a long period of time. They're backward looking. Doesn't mean it's going to happen this year. And in that average, there's some really good Septembers as well. And we are roughly tracking along. Look at, January was a positive month, February was a negative month, March was a positive month, April was a positive month, May was a bit of a pullback, June, July were positive, August a bit of a pullback. So actually we are tracking pretty much in line with what you would expect based upon those averages. I think that's interesting stuff. Maybe you think that, Carl, that was a complete waste of my time. Just do my stocks, please.